crypto markets retest key supports after the bounce gets sold. The Ethereum ETF launch gets pushed into next week, but relative prices and implied vol hold up in anticipation of a potential move. And Cool Skew gets sold across the board as bearish on-chain signals emerge. All this and more in this week's Crypto Options Unplugged. Hey everyone, welcome back to Crypto Options Unplugged. I'm Imran from Options Insight. I've got my man Dave from FRNT here, and today our special guest is Jonny Fry, Head of Digital Strategy from Clearbank. How you doing, Jonny?
Hi, thanks very much. Thanks for asking me on.
No, pleasure to have you here.
Yeah, good to have you, Jonny.
So, Clearbank, give us a little bit of background. What are you doing over there? How did you get into crypto? What's going on?
Well, okay, so the potted version, I set up and ran for 20 odd years a UK publicly quoted asset management business. So nothing to do with crypto, very much traditional. Bought Bruin Dolphins Unit Trust Company back in the early 90s and then converted that into a UCITS company. We also had a Luxembourg CCAV. We floated the company on the London stock market. And I left that about 15 years ago and was slightly frustrated that custodians, trustees, shareholders, accountants, lawyers, they all wanted information about a pool of assets, where is the money, where it's invested. And you had to slice and dice that information and very often give similar bits of information to multiple parties. I thought, if there's a way to have one record of that information that people could have ideally in real time, it would just make people's life a lot easier. And this craziness which you have where, so the annual management fund fee is 1%, but the total expense ratio could be 2.5%. It kind of felt a bit disingenuous that ultimately the unit holders thought they're paying 1%, but they're actually paying a lot more. And so came across blockchain and the technology, not being a technologist, being a tad dyslexic, couldn't spell it, but was interested behind how could it be used and started looking at who, how, where and why blockchain technology and digital assets were being used. Anything from sort of, the crazy sort of crypto and ICOs and all that sort of stuff in today's parlance, meme coins, which I think actually we can learn a lot from meme coins, through to how is the technology being used in the derivatives world. And I mentioned derivatives because that's the biggest asset class by far in the financial markets at just over 1.2 quadrillion. How many zeros in a quadrillion though, Imran? You're a clever lad.
12?
No. Well, okay, 12. Is that the American or the British version?
Oh, this is silly. It's silly if you've got a number and it's a different definition.
Well, that's what we had with billions and trillions.
I can get on board with a different spelling between the US and the UK.
Oh, we'll come back to the spelling if you want.
The Zs, but different number of zeros. That's ridiculous.
Well, the Americans think it's 18, and the Brits think it's 24.
Wow.
But it's a big number. It's a big number. And so therefore, at Clearbank, quite interesting because they were the first bank in 250 years to be granted clearing bank status. So things move really quick here in the UK sometimes. So we got Barclays, NatWest. Who else you got?
Well, clearing banks.
Yeah.
HSBC.
Lloyds Bank. Okay.
We don't
I worked at HSBC.
Get people coming on here and asking us all the questions.
Yeah,
Well, you just froze up. You couldn't remember Lloyds Bank. Yeah. So basically what they do, they are a narrow bank or utility bank. So they don't lend money. They simply take companies' deposits and then they lodge them at the Bank of England. So it makes Clearbank arguably one of the safest banks and with great sustainability characteristics because the Bank of England doesn't lend money. So it's not like going to a normal commercial bank whereby they could be lending the money to, I don't know, drug research or sort of tobacco companies or armaments or whatever like that. Your money is held at the Bank of England. So if you want your money, bang, you can get your money immediately. But they actually just focus on regulated UK companies. So basically providing banking rails. So probably the best known to the audience would be a company called Tide. Actually, Dave, I think you bank with them.
Yeah, my business bank's with Tide.
Oh, there you go. So 100% of your money is held overnight by the Bank of England. So there's no credit risk. And they built the whole business on Azure Cloud. and got regulated about 10 years ago now. And we're just in the process of getting regulated in Holland. So the euros will be held by the European Central Bank, and then we'll passport across into a number of different countries. And last year they raised a chunk of money with a view to buying a US bank. So again, the money will have a Fed master account, so the dollars will be held by the Fed. So from an electronic money, an e-money basis, they provide the back end, the infrastructure for a number of regulated companies.
And then what's your role? Like, what do you, as a head of digital strategy, like what do you have to do for Clearbank?
Well, it's really trying to work out, well, they were worried, are we going to have a Kodak moment? So Kodak invented the digital camera and kind of put themselves almost out of business. So Kodak have a huge range of very, very interesting technology and patents, but the days of using sort of, click and film and all that sort of stuff broadly has gone. And so what they were worried, what happens if there's a wholesale switch to programmable, to digital money? Because the future of money is changing, and arguably we're going back in time. So here we are on the East End of London, where historically you'd have traded a bushel of wheat for a bucket of eels. And it was a peer-to-peer transaction. It was a bearer instrument. So you actually had something tangible and you could then swap it without going through different markets and exchange, things like that. Today, if you put £100 into NatWest, whose money is it, Imran?
NatWest money. Because
they can hypothecate it, they can lend it out, and hopefully they don't go bust. The trouble is we've just seen a bank in Switzerland go bust. We saw 480 billion in America last year just vaporize. So there is risk within the banking system without a doubt. So rather than actually having your money and you're worried about a credit instrument, I be repaid, you can have a bearer instrument. So just up the road from here, we've got HSBC. They've just recently issued a gold-backed form of payment. So your name is actually allocated to a bar of gold. There's a company in Germany called Swarm. It's a regulated digital exchange. They've just done a deal with Brinks, the security company. The gold is held here in London. So you can go to Swarm and you can buy a token linked directly to a bearer instrument, which is backed by gold, which means then you and I can do a transaction peer-to-peer. It's recorded on a blockchain, but the difference with the bearer instrument this time, it's got that. Not a dirty finger, hopefully. It's a fingerprint. It's a digital identity. So you can track and trace how that money's being spent. And this arguably is why there's so much interest in digital assets at a government-led situation. And 90% of central banks are looking at how do we bring out central bank digital currencies? Because there's really three programmable forms of money that we're aware of. One is central bank digital currencies, two, tokenized deposits, and three are stable coins. The trouble is with stable coins, it's a dreadful name. Because if you're in America and you buy a European stable coin from Societe Generale, well, that's not stable because you earn and spend money in dollars. And likewise, if I go and buy a US tether, a USDC, I tether, well, it's dollars. Well, I don't earn and spend money in dollars. So there's nothing, it should be pegged. So it should be something pegged to something. Could be pegged to real estate, could be pegged to gold, could be pegged to the yen, whatever you want to be. And that's a more accurate description because otherwise you have the situation where you have USDE, which is a stable coin. Its investment objective is the US dollar, but its investment strategy is a hedge fund. It's selling it's the sort of stuff you'd love. It's selling volatility on crypto stuff. Hence the yield was up to 20-odd%. So therefore it very much is misleading people because the challenge, and I'm sure you've seen this in this space, is that when you say, oh, I'm dealing with blockchain, oh, well, that's Bitcoin, Ponzi scheme, Silk Road, dodgy geezers, don't want to touch it. And that's typically what regulators and institutions unfortunately say. But actually, if you unpick that and look at the technology underneath that powers cryptos, there's some fantastic applications already being used at scale of the technology. And that's why we're beginning to see more and more assets being tokenized or digitized. So that leads me to my final question. How do you spell tokenization? with a Z or an S?
Well, we are not based in the US, so we're going to go with the S.
You're wrong. You're wrong on two counts.
But I have to say, it is refreshing to have someone...
Hang on. You're wrong on two counts. You're wrong on two counts.
Second count.
Well, no, the first reason you're wrong is because if you're going to use a word, you want to get the most search engines, don't you? You want to get the most people identify and find that word. So I'm sorry the Americans win because they're all the search engines typically programmed by our cousins across the pond. So you've got to use a Z. Well, that kind of annoyed me. So I then went to see Professor Sarah Green, who's head of the Law Commission for England and Wales, and said, Sarah, you're a lady of words. How should we spell it? Because I write a newsletter every week on this thing called Digital Bytes. How should I spell tokenization, monetization, securitization? She said, well, it's with a Z. I said, what? She said, yeah, a few years ago, not sure how many, we changed in the UK, or English language was changed from a Z to an S. And the Americans thought, no, we like Zs, we'll keep the Z. Or they don't say Z, do they? Call Zs. So it's a Z. So actually, you're going to have to start changing it. You've got to start using the Z because you get more.
I actually do use the Z because most of my subs are in the US.
Well, there you go. But yeah,
There you go.
Seeing as we were sitting in the UK, I thought I'd say it. I represent for the UK. But it is refreshing to hear someone who's been in finance since the 90s. And rather than the motivation being chase the number, go up, and let's get rich quick because, you know, it's an adoption game and it's like all the young guys think it's better than gold and everyone's buying it and it's the future and we can all get rich. It's like, actually, no, the technology can really help finance move to a more efficient place, right? I mean, you know, we were talking about this earlier. That I think that's quite refreshing to hear that argument because you don't hear it that much. Like even us, we don't really talk about that part of it very much.
No, exactly. And I think this is what frustrates me, certainly like with regulators. I mean, like anyone in a bank, like this closed, often like kind of ignorant like attitude to it. And actually I like the description you used earlier of like blockchain and what was it?
Spreadsheet.
Excel spreadsheet.
On steroids.
On steroids, yeah. And it's like, it's not that complicated, but actually like the beauty in a lot of the technology is like the simplicity of it but it's the kind of opaque ways the current financial system works that creates all the problems. And that's why it's a threat, because it's like, you know, as soon as you've got that kind of opaqueness, then that's where money gets made. And you know, people say the whole sort of industry is built around that. All of a sudden there's going to be a lot of middlemen cut out that you don't need all of a sudden. Because of this
Dave, you're absolutely right. The most, if there's one thing from today I would like to sort of give to your viewers, just one thing, what blockchain gives you is transparency. And if you have something that's more transparent, you trust it more. Well, bearing in mind that one of the key reasons for regulators in any jurisdiction is to maintain confidence in financial markets. Because if you don't have confidence, then everything literally vaporizes. Because, you know, what is BP actually worth today? It's only worth what someone's willing to pay for BP or the US dollar or gold. So you've got to maintain confidence in financial markets. Well, if you've got more transparency and more trust, then it's lower insurance premiums. It's a better understanding. So that's where blockchain is really, but it's not the silver bullet. It doesn't solve all problems, but it is a great way. And it's the first time that I've seen from a regulatory point of view, it can actually reduce costs, but it can increase the transparency, the access to information in real time. So it's a really powerful tool for regulators, and it's really, really good for the end consumer. And we often lose sight of that. It used to irritate the heck out of me. You know, we managed people's money, and sometimes asset managers forget it's not their money, it's the clients, it's the end investors. And unfortunately, we've seen a bit of a disconnect in many, many markets with individuals and if you like, the investments that they hold. And if you look in the UK, there's 31 million taxpayers. 280,000 of them pay capital gains tax allowance. Why are we paying for this tax-free wrapper called a fund? Why are we paying an extra half, an extra 1%? Because most people don't use a capital gains tax allowance. And if, as I believe is going to happen, nearly all equity trading is done by bots and algorithms, you're going to have mass customization of your investment portfolio. And it'll be traded 24/7 by bots. And they'll be utilizing
As long as they make money, I'll be happy.
Some of them will, some of them won't. But, you know, it's not just me saying this. It's, you know, look at Jenny Johnson from Franklin Templeton. She's saying every mutual fund, every ETF will be tokenized. Look at the biggest asset manager in the world, Larry Fink. You know, 11 trillion. We're going to tokenize everything. So people have got to understand this is not about speculation. It's about improving the efficiency.
The infrastructure is changing.
And the infrastructure is very much changing.
It's funny. I was writing in my Connecting the Dots newsletter on the weekend about the impact of quarter end on liquidity, and got lots of questions around it, like why does that impact liquidity? And talking about this concept of window dressing and banks sort of window dressing the balance sheet. And because essentially for like the regulations around leverage ratios and all that gets taken from a snapshot at the end of a quarter. So and so for those who don't know, under these kind of leverage ratio guidelines, obviously you have to have a certain amount of capital to back the total assets and exposures of the bank, and there's charges, there's capital charges associated with that, according to these leverage ratios. So at the end of every quarter, one easy kind of balance sheet reduction thing is to reduce your repo lending activity. So essentially banks like reduce the repo book, so there's less lending, which impacts liquidity, which is partly why we can get onto this. Well, I think Bitcoin got sort of smashed last week, and we may be getting a bit of a hangover from that into this week. But people straight away, and you explain this to people, go, oh, but hang on. So they spend the rest of the quarter taking more leverage and risk than they should. And then just on these couple of days at quarter end, they kind of reduce it so it all looks good. It's like, yeah, that's how.
Yeah, it's just a stupid behavioural thing.
That's how this inefficient, like traditional financial system works. Once it's all on the blockchain, it'll be very easy to calculate what a bank's average risk is and leverage that they're taking and charge them accordingly.
And adjust their balance sheet in real time.
Yeah.
So using programmable money, the program is nothing more like a spreadsheet. If it rains, I need an umbrella. If it doesn't rain, I don't. So if that happens, do that. If that happens, do that. And that's what we're now seeing. Programmable money, digital money, is going to actually reduce the risk. And it's going to very much address something like that. You know, the repo market, already you've got something like Broadridge, you've got JP Morgan, you've got Goldman's. They're all doing $1 trillion a month on chain. So again, it works. You know, we were both at the Goldman Sachs Digital Asset Conference, and two very big clearinghouses both said, can you stop doing proof of concepts? You've got to get on board with this now, because we know the technology works. We know it's scalable. We know it's quick. You've got to start doing it, because there's some real benefits. And as we go more and more to T0, i.e. delivery versus payment, well, that's going to be it's going to be very difficult to do it with fiat banking systems, i.e. what we use at the moment. And that's why we're seeing more and more interest in this programmable money, central bank digital currencies at a wholesale. And you're seeing almost like a backtracking very few central banks are now talking about doing a retail central bank digital currency, apart from the Europeans. The Europeans are very, very keen, because they're not happy with the dominance of the debit and credit cards, because they're not European. They're typically American businesses that are dominating the payment scene in Europe. But if you have a central bank digital currency in the euro, then a lot of that may well go to that as instead of the credit and debit cards.
Aren't the people scared of central bank digital currencies because it's there's too much control over their money, basically, right? That's the fear. That's the fear, isn't it? And
they need to wake up.
Huh?
Wake up.
Go on.
They've already got the government's already got access to your information. And a good example of that, look what they did to the Canadian truckers. Jonny Fry on Big Bear truck, registration 234, shut his bank account down. Johnny, can you move your truck?
Because he donated to the...
No, because I'm the truck driver. And
the truck driver. But even people who donated to them were getting shut down. Absolutely.
So they already know your info. But it was also really interesting. We're a member of an outfit called the Digital Pound Foundation here in London. And they commissioned some research from the Manchester Business School. And it was young whippersnappers like you, Imran, you know, sort of Gen...
How's 44 young, by the way?
You're not Gen Z, are you?
I'll take it.
Well, Dave then. Dave's younger than you, isn't he?
That's funny. I actually found out the other day that I'm in the millennial bracket still.
Are you?
Yeah.
What year were you born?
80.
So what am I at 79 then?
You're almost an old fart.
I know.
You might be a boomer, mate. You might be a boomer, mate. It's all right. You look younger than me. It's all right.
But the research they found is that, and they did it at Manchester Business School for their a number of their PhD students, roughly 50-50 women, roughly 50-50 UK, and 50-50 were based overseas studying. And that worry didn't even come up. Are you concerned about the privacy? Are you concerned about control? No. And they said, why? Well, look, we put all our information on TikTok, Instagram, Meta already. If you want to get access to people's information, typically it's there. What we're more interested in is is it safe? I.e., what's backing it? And why should I bother? Is it safe? Now, in this country, it's difficult because we don't pay for banking. If you go almost any other country, you're being charged for your banking transactions and to run a bank account. So this country, less incentive, but certainly overseas, a lot more interest. And then you go to places, you know, in some of the faster growing regions and faster growing markets in Latin America or Asia, whereby, you know, they are digitally native. You know, 40% of the world are on e-games. You've got the e-games just starting in the Middle East, announced today, you know, 60 odd million prize money. You know, I've never spent time looking and playing e-games, but 40% of the population
better learn, eh?
already do. Yeah. I can't spell e-game. Can you give me a hand?
It's funny. That's exactly like, it's funny that you mentioned this because I was having this conversation with someone, I think at the weekend, and they're talking about jobs that will exist in the future. And, you know, the thought 20 years ago or however long it was, that you could sit there playing video games and make millions out of doing it, right?
Well, look at the Filipinos.
Yeah.
That's exactly what they were doing.
It's crazy.
Yeah, earning money by playing. Look, my daughter spent hours on, what's the one when you build virtual games?
Oh, yeah,
Roblox.
Yeah.
Well, if she'd actually then been able to sell, you know, I don't know, 100 hours worth of Roblox and she'd already built all that sort of stuff, someone would have paid to saving going through the 100 hours of doing it.
I think that's the other thing as well. When you talk about, you know, the future of finance and everything, certainly for the younger generation coming through, like, you know, digital currency and everything will just be a very natural, you know, it'll make sense. In fact, they'll probably look at, you know, the existing fiat system and be like, how did anyone even use that?
Yeah.
It will feel very natural to them to be like, you know, transacting in digital goods. NFTs will just feel like a really normal thing.
And the speed as well. They'll be like, why would you be waiting days for this?
Yeah. Like, I can't.
Why did you walk around bits of paper and coins?
Yeah.
Well, you know, you just come out of the Roman era or something?
Yeah.
You know, they want it and they want it now.
Once you see that, and this is what I think is really interesting with you, Johnny, like, say, having been like a stalwart of the, you know, finance scene, to kind of get it. But I think once you get it, once you see it, you're like, it just seems the most obvious thing in the world. And it's a little bit like what we're building at FRNT. Like, you know, you think of years gone past when you had these, you've got these niche like commodity banks, you know, that was going to be their specialism, to have like an investment bank kind of focus around commodities and providing to and catering to that sector. The idea for us at FRNT that we've got an investment bank that's basically going to be focused around the digital asset space is just like the most obvious business in the world. And yet, you know, why is everyone else not piling into it? Eventually they will be, I'm sure. But yeah, this whole space, we're so early, and there's so much growth and there's so much going on, and it's it's great to see what you're doing.
On that point, we're so early. We're having a little dip right now.
Yeah.
So we should probably talk a bit about the market.
Here for the tech, but really, price go up.
You're FOMOs, you aren't you? Cut the FOMOs.
Yeah. No, I think
you've got more exposure than we have, right? A little birdie tells me that might be the case. But go on, what do you reckon? Having a bit of a correction again, testing 60K.
Yeah, back testing 60K. Look, there's a couple of things. I do think we had like the quarter end last week. Obviously, that had, as I spoke about, negative like liquidity impact on things. We're also into July and the Mt. Gox distribution, so maybe again there's a negative supply dynamic, supply dynamic going on there. So yeah, I still think we're in a range like this 60-70K range, give or take.
Yeah, but if we break the range, that extends to the downside, right?
Yeah.
People talking about 52-ish, something like that.
I must admit, I don't see it. I don't see. I don't think the leverage is there to really flush us out. If we continue to have this supply like hit the market,
I heard an argument about miners having to sell because their revenues have dropped quite a bit.
Yeah, which is again quite like a typical like post halving phenomenon. So you still probably got that playing out a little bit, and feels like it's being dragged out. But all those things should abate. I mean, I always like when you get to a quarter end, half year end, like it's a really good chance to step back,
take stock of what's happened.
Yeah, and if I think about coming into this year and you know, from when we were talking at the start of this year, the kind of bullish thesis from a macro side of things, i.e., we're going into an easier rate environment. Major central banks will start cutting rates. That process is starting to play out. ECB have gone. Bank of England look like they're going to go. Obviously, S&B have been cutting. The US data has had this resilience that we keep talking about, which we've had to push out the rate cuts for them. But I thought that Powell speaking yesterday was pretty, I'd say, dovish, like talking about we're back on this disinflation trend. He even noted that there's signs of labour market weakness. So the Fed are going to go.
Lombard were out saying they're going to go in July, but I feel like that's a bit early, right? That they're going to cut
this
in July.
month.
Yeah, they're going to.
Yeah, no.
What, in the States?
Yeah,
I think I wouldn't be surprised if they tee up September.
Or maybe they'll announce. Maybe they'll kind of telegraph they're going to go in September. They'll telegraph that maybe in the July meeting. Who knows?
Yeah. But we're moving into that, right? Global liquidity has been improving, and is actually set over the next few months to improve. And again, these things aren't a straight line. We have moments where liquidity is being drawn on, but yeah. So kind of when you think about that macro backdrop, and everyone kind of gets so day to day caught up in price action. Bitcoin's up 40% year to date. Nasdaq, which would also be a beneficiary from this environment, and obviously we've got the secular trends overlaying it. Nasdaq's up 17%. So I'm like, everything to me just looks okay. And then we've had the halving, we have the typical post halving malaise. We've chopped around in a bit of a range. We're 15% off the all time highs in Bitcoin. So yeah, I think everyone gets a little bit impatient, but I think we're moving in the right direction. Some of these negative flow dynamics with the miner selling, with the Mt. Gox distribution, obviously that'll abate. We've got ETH ETF sort of coming up. We've had this
keeps getting kicked down the road, but
gets kicked, it is coming. We've had this massive shift in the political winds in terms of Trump getting on board, and then that forcing the Dems to now kind of start, at least not wanting crypto to be a hill they're going to die on. So look, I think coming into second half of the year, we're set up perfectly. One of the big things as well, I still think, is with this relative divergence between the US and the rest of the world, the yen and the Chinese yuan are still under pressure. And I've said before, I think until the pressure on those eases, whilst China are having to essentially intervene and support their currency, they're selling down their FX reserves. That has a negative impact on liquidity. And then also, I do think they're incentivized to keep a lid on Bitcoin as well. So we've got a few of those negative dynamics.
It's all hinging on US labour market. As soon as the US labour market turns down, yields go down, dollar yen and all that get hit, and then crypto can go again.
And then we go, and it'll be quick. So
yeah, I think it's also worth bearing in mind there's an old adage in the stock market: sell in May, come back St. Ledger Day. And actually, volumes themselves tend to be fairly poor during the summertime period. Now you think, well, what's that got to do with crypto? Well, bearing in mind that 26% of all flows into BlackRock, biggest asset manager in the world, Bitcoin ETF, 56% of all Fidelity's inflows so far this year, Bitcoin ETF. So you're seeing some of these traditional asset managers seeing a lot of flow of business. Now those flows have abated to an extent, but you've got the biggest thing, we talked about this a minute ago, confidence. Now, one of the things that harms confidence is what's going to happen to our taxes? What's going to happen to immigration policy? Well, you've got all the shenanigans going on in France at the moment, where actually the far right and the far, and the far left are sort of kind of being forced to sort of, maybe we need to actually do something sort of. We've got the elections coming up in the UK. You've got, I actually read today, it's closer than people thought between Biden and Trump. So there's a lot of uncertainty at the moment.
Well, as in Biden's closer than we thought he would, because I thought Trump
was way out in front.
Yeah, but he's not there.
But now they're saying no, actually, because people are concerned. Have this announcent from the from the courts. But actually, is that really independent? Saying that the new president of the US can't be sort of touched from a legal point of view. So there's lots and lots of uncertainty, and against all that backdrop, everything's really expensive. You've already said about the equity markets. If you just go and buy a beer in London, let alone try and buy a house. So there's a lot of people saying, well, where do we go to from here? And let's be honest, crypto is a risk on asset class.
I hear that. I do hear all of that. But it doesn't stop people buying meme coins that are worth nothing. right? Just on
Doesn't
a
stop
whim.
people buying a lottery ticket every month.
Yeah.
It's that's all it is.
Yeah.
There's nothing wrong with gambling if that's what you want to do. I've just come back from Vegas. 56 million people went there last year.
You're saying the percentage of money that's in that space is so small relative to everything else.
It's tiny. Look, the whole crypto market is valued at about 2.3 trillion.
Mm.
Whereas we mentioned earlier on, the derivatives market is 1.2 quadrillion.
Mm-hmm.
So actually the big money, but what's interesting longer term, it's, because of podcasts like this, institutions where the real money is, are beginning to realize, say, I need to have some asset allocation to this particular sector. That doesn't happen overnight, because I've got to understand what does it mean? How do I do it from a legal, regulatory and administration point of view? But without a doubt, there is a weight of money out there which is going to find itself into the crypto market.
I think as well, just from a pure trading point of view, and whether it's stocks or whether it's crypto, I think like Bitcoin, I think most of the gains in any given year are made in a period of like 10 days or something. Like so there is actually a lot of, you have these big moves and like, prices narrative, and everyone jumps on and gets excited, and then we drift for a bit, and then everyone gets really impatient because we're used to like these big moves. Like, I mean, I think we're the only asset class in the world that could be up 40% year to date, and sentiment feels absolutely.
People are disappointed.
People are like, this thing's going to zero. Clearly, it's like we are up 40%.
But the long-term holders have been selling, though. If you look at the on-chain stuff, right?
Yeah, and it makes sense. And again, like if you're, I mean, I think a lot of the Mt. Gox stuff would have been hedged. So probably net, it's not going to be as big an impact. But some wouldn't have hedged. And if you were holding that from all that, you're a false hodler, and you're now worth like a few quid, you're probably going to want to sell that.
Yeah.
There's all those things. And it just feels like it needs a catalyst. I think there's macro catalysts to come from either the Fed like cutting rates, and I do think the data is weakening. Like it's people haven't really jumped on board with the fact that weakening is underway, and like the weakening of the labour market. But I think that will turn quite quickly, and then we're back on that trade. If it doesn't, it doesn't feel very sustainable what's going on with Japan and with China. So either if China end up having to like just devalue and have this one-off devaluation, then there's going to be a huge amount of capital that flows out of there, and Bitcoin will be a beneficiary of that. So there's these catalysts. I just feel that we're on the edge of sort of exploding. But does that happen next week? Does that happen next month?
The vol market's certainly not saying it's happening next week, right? They're crushing the vol.
So what are we seeing on that side of things?
So vol's probably lost close to 10 vols in the front end of the curve last week. Even Ethereum vol's getting hit now. It does still hold a spread to Bitcoin around 10 to 12 vol points above, because people are still anticipating some sort of move on the ETF launch. Maybe a load of inflows come in and it does 10, 15% quickly, something like that. So it feels like what's being priced. So would expect some sort of vol reset in Ethereum next week when if and when we finally get the launch. Flow wise, a little bit of put hedging in September that we saw in this latest little downtick, but still lots of call buying going on to September, December, March next year in the kind of 85,000 to 120,000 type strikes. So people still very long-term bullish, but expressing that view in longer dated call options. Despite that flow, upside was still getting cheaper. So call skew compressed by about 1 to 2 vols, both in Bitcoin and Ethereum. So yeah, we're kind of in that balance where the narrative's still there that longer term bullishness creates a call premium in the long end that has cheapened up a little bit as people are kind of losing a bit of patience, like when the hell is this thing actually going to break? And then short dated put buying is coming in every time we like dip down to 60k. It makes people a bit nervous reaching for hedges. Yeah. Even myself, I did the same thing, right? It's like it's such a technical market that you think that if it does break 60, it could easily drop like to the low 50s. And given that the vol isn't really reacting on the way down, you can own that downside on a 40 something vol, right? So you can do like quite wide risk reversals where you buy like the 50,000 strike August puts, and you can sell like 75,000 August calls for zero cost, let's say. And, that allows you to hold your Bitcoin, but know that if we get a fast move down, you're going to be able to monetize those puts basically, right? And if we get a rally, well, it's a 15,000 rally from here. It's like a 20% rally from here.
It's a free bet.
Yeah, exactly. As long as you don't mind giving up some of your Bitcoin up at 75 if it goes there quickly, right? As long as you make peace with that, then that's the way you can hedge yourself for these sort of moves, right? So that's the point of using options, using skew, especially when the skew's not repricing in a way that's too kind of expensive.
Yeah. The other thing I'd say as well, like, I mean, we spoke last week about the impact of quarter end, month end, quarter end. Obviously, we've got a US holiday tomorrow, 4th of July. So I kind of feel this week again is a little bit of a like messy week to try and really ascertain too much. I think we'll see and know more how things are going to play out from next week.
Let the dust settle a little bit.
Yeah, let the dust settle. I think liquidity comes back in, risk positions get put on. I say that window dressing unwinds itself. There's been a lot of chat today around the SOFR rate sort of spiked yesterday, which again, I think is just a hangover from sort of month end and liquidity things around that. Although again, I do think that speaks to this idea that with all this treasury issuance are soaking up a lot of liquidity. And, it kind of felt reminiscent of, if you remember the repo spike in 2019 and the sort of mini funding crisis around that, the Fed are going to have to NQT and they will be like the liquidity providers of last resort to the system. So I think we're kind of building into all these sort of narratives. It's just about being patient because they're all playing out perfectly. And I as we go into the second half of the year, I think we're still really on track to I still have a view that we go to 100K or so in Bitcoin. And there's nothing from the macro that makes me question that. And in fact, I'm probably more confident given how the political winds have shifted more in favor of crypto. The SEC have kind of had their wings clipped a little bit.
It feels that way, yeah.
So yeah, I think everyone just relax.
Jonny, you want to give us any closing words? Appreciate you coming on, sharing your wisdom with us.
I suppose I would sort of pull back from the crypto side and look at people often ask, well, where are we going to see this really being adopted? Where are we going to see it really happening? And in the UK, it's not a big asset class. That are money market funds. There's about 25 billion in them. In Europe, there's about $750 billion. And in the US, about 7 trillion. So worldwide, you're looking at a $9 trillion asset class. So that makes it about 4 times the size of the current crypto market. So it's an asset class that institutions are certainly looking at. The trouble is that you can't get your money in and out of a money market fund quickly. It takes 3 or 4 days. But what we're beginning to see are more and more fund managers tokenizing, digitizing their money market funds. And I think that's really important because then they can be used as collateral and they can be programmed so that people can actually use them for other trades. And as we start to see asset managers actually tokenize their money market funds, I think it presents a huge challenge then to regulators. Because if you, BlackRock, can allow not only to put your money in and out, within in real time, why are you making me wait to trade once a day and one price? You give me the price on my UK fund, my American fund, whatever it may well be. You can do it money market. Why can't you do it on the other type of funds? And we had the situation last year. We had a third-party administration called Link that were pricing the fund for Neil Woodford, who I'm sure you're familiar with. Fantastic fund manager, but unfortunately kind of made a few mistakes and had too much money in unquoted stocks and was basically breaking the rules. He got sanctioned, Link got fined. So you're sitting there and thinking, well, do I really want to have the pricing of the fund, the same people actually managing or within the same organization? And I think from a regulatory point of view, it's better to have the fund priced a bit like an ETF, 4 or 5 market makers that price the fund. And the fund itself is trading 24 hours a day, 7 days a week. The funds market is 145 trillion.
Wow.
So as we start to see the regulators understanding, saying, this technology can be our friend. This technology can give us more transparency. This technology can make sure that end investors understand a little bit better how they can see what's going on. They can trade when they want to trade to, typically, evenings, weekends, because they're doing their day-to-day work when the markets are open. And then finally, I'd like to leave you Robin Hood. not as in the Sheriff of Nottingham, the other one. Robinhood did a little bit of experiment last year, and they said, okay, we're going to allow people to trade outside market hours. They booked 10 billion worth of trades. So clearly there is a demand for people to trade outside market hours. Now, I know you guys are used to it because you're deep into crypto, and that thing trades 24/7. But there's no reason why you can't see debt instruments, equities, real estate, commodities, cash, all trading 24/7. And that will actually reduce volatility, because the markets typically close London time 9 o'clock on a Friday. They don't reopen until sort of Sunday afternoon when Tokyo opens. So they shut when Wall Street shuts, and then they open again when Tokyo opens. So Friday through till Sunday, afternoon, they're shut. So you've got that real, I can't trade. Oh, the market's going up or down. But if you can trade things 24/7, it should actually reduce the volatility. So I think that's why longer term, we're going to see the use of the technology behind the cryptos being more adopted in the real world.
Yeah.
Great. All right. Well, we'll call it a day. Don't forget to like and subscribe to the content so you get these videos coming at you. And thanks for watching. We'll catch you all next week.